The Fed decides on interest rates this evening, 7 p.m. UK time. It's widely expected the Fed is going to highlight its determination to overcome inflation at the expense of other aspects of the economy. That is, there is an increased chance, according to some economists, we could well see the US economy and other economies around the world go into recession as a result of its determination to beat inflation. We're looking for a further 25 basis points to take the target range between 5 and 5.25%. And this stubborn inflation is a real concern. Let's take a look at how to trade this. At the moment, at least, we've got weakness in the US dollar. And this is seeing these two green candles here on the far right-hand side of the chart for the euro-dollar trade. Now, if you see a continuation of this weakness in the US dollar, your stop goes underneath the bottom of yesterday's candle. So around about the 109.40 level, if you're long on this. The only thing I would caution is if the Fed is ultra hawkish and it goes to further underline its determination at all costs to beat inflation, that it will drive the US economy down into recession. We could well end up possibly seeing the Fed steered into further interest rate rises and continuation of these into the back end of the year. And that could well see some money going to the dollar, which would see a reversal of some of the moves that we've seen. Now, if we see a determined Fed, we could well end up seeing further declines for some of these risk assets, including, let's just take, for example, the S&P 500. Now, some technical analysts continue to monitor this market and expect these lower highs that we've seen to continue to see a drive down to these lows we had back on the 13th of October last year. And that, for some, is the slightly longer term expectation for this market. So short term, we could well get some buffeting around as we see the Fed continue to align itself onto this trajectory to try and beat inflation. But it is certainly expected to continue to see some economies come out with further downside expectations for growth. Now, this is an area where we're seeing big gains, and this is the trade on gold. Yesterday, up well above the 2000 level at 2018. And if we see a continuation of concerns about the outlook, we could well end up seeing more money going into gold. And that will be at the expense of some of these other areas of the market where this is indicating to us that there's a higher degree of expectation. We could well see the recession come out of all this. Yesterday, big declines for the price of, this is Brent, but also for some of the base metals as well, where we're seeing some relatively hefty declines. We're very close to this line of support now on copper at 84.42. You get a break of that. You're then on the way down to the 8300 level, which is a 200 period moving average, this red line underneath where we are there at the moment. So we're continuing to watch what happens with the Fed. 7 o'clock tonight, we'll get some more details. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.